Hey, what's going on, guys? It's Sal Bossio with Mortgage Universe, where real deals get done. Today, I wanted to talk about HELOCs versus HELONs, home equity line of credit versus home equity loan. Now, most of you that are seeking financing and don't want to touch their first mortgage because of a great interest rate, you might be in the 2s and 3s from the COVID era, and you're looking for additional financing using the equity in your home, you think immediately HELOC. I hear, hey Sal, can I get a HELOC? You absolutely can. There is another option called the HELON, and that's what I wanted to discuss is the difference. So a HELOC is kind of like having a credit card against your home. You can push and pull, you can use it, pay it back, use it, pay it back for a certain period of time called the draw period. Usually that's a 3-year period, sometimes it's a 5-year period, 7, and in some cases a 10-year period if you can find a lender to actually do that. I have a couple. But you have a certain amount of time to treat it like a credit card until it becomes the repayment period. And you have a certain amount of time, usually again, if it's a 3-year draw period, that leaves you with 27 years left to pay that loan back. So first I do want to talk about the HELOC itself, and then we're going to kind of move and pivot to the HELON. But the HELOC is great if you don't need all your funds right away. You can get approved for, let's just say, $150,000. You could take maybe $100,000 at closing and, do what you need to do. You can pay it back. You can borrow more. You can take the full amount out. And then whatever your balance is at that 3-year period. Okay. So let's just say you took out 100 and in 3 years, your balance is down to 50 grand. That your HELOC, your line of credit will end at that point. Okay, so at that point, you're going to basically be paying back the $50,000. So your payment, whatever your payment is at that time, it's going to be based on the $50,000 at whatever interest rate at that time. Usually, that first 3 years is an adjustable rate, and it could move up and down each month. And by the time that 3-year period hits, where that HELOC ends, you're going to be paying back on whatever balance you have at that time for that next 27 years. So if the interest rate happens to be really high at that point and you don't want to make those payments, a lot of my clients will often either refinance out of them, or they might even be selling the home at that point. They might have spent this time fixing up the home with the HELOC money, getting it ready to sell, for that second or third year. So again, the HELOC, there's usually a 3, 5, 7, or 10-year draw. Most of the HELOCs that I do are 3-year draws because those yield the lowest interest rates. If you do a 5-year draw, it's a little bit higher of a rate because it essentially gives you more time to play with the money. 7-year, a little higher, 10-year, even higher. Pretty typical. Now, a HELON is a little different where it's a fixed balance, it's a fixed payment. The payment doesn't change regardless. If you and it's not a credit line. It's basically like a second mortgage, a closed-ended second. So another name for a HELON is a closed-ended second, where it's basically just like your first mortgage, except it's a second mortgage, an additional payment that you're making. It's not a line of credit, so whatever you take out at closing is what you have, and that's it. It doesn't change. And the only thing that you can do at that point is make payments on it and pay it down, just like your first mortgage. Now, those types of loans are honestly, well, it depends on the situation, but I often find myself having borrowers that are more interested in that loan type because those rates are generally a little less. They're usually 1/4 to 0.5% better, sometimes more than that, than the HELOC rate. Now, although you lose a little bit of flexibility, it is a fixed rate, it is a fixed payment, you know your balance, and it's very simple. Whereas a HELOC, the first 3 years, you're really only required to make a minimum payment. An interest-only payment is what we call it in the HELOC world. So it's kind of like a credit card where, when you get a credit card, you take out a balance and you see your my minimum payment is only $85. Well, in reality, if you're only paying the minimum payment, you're only paying interest. So you're essentially paying 100% interest. The thing that's cool about the HELOC is that it does give you that flexibility. You only have to make the minimum payment. I always encourage my borrowers to pay above it to actually make progress, but it just depends on the client's situation. Everyone has a different need, everyone has a different circumstance, and that's why there are those two options. HELOC, home equity line of credit, where it's a line of credit you can use for a set period of time called the draw period until it turns into the repayment period. And then again, once your repayment period starts, it's kind of like a HELON, right? Where it becomes a balance that you're paying back, a fixed balance with a fixed payment, fixed rate that you're paying back. Where the HELON, it starts like that on day one. And then, I mean, some of the things that people use HELOCs or HELONs for, either one, is home improvement, paying off debt, taking out equity to just buy another property. I've been doing a lot of those lately, where it's a really nice way to, I deal with a lot of borrowers who have tons of equity and have never really thought to use it. It's just been sitting there dormant, and using that equity to purchase another property, it's a great way to bring in additional cash, or a great way to bring in some extra money, some passive income, some additional cash flow. So even taking money out to invest in stocks, I've seen that done as well. They're either paying off debt to reduce their monthly output to essentially increase their cash flow, or they're using it for home improvements, or buying real estate or other assets, or stocks and commodities and stuff like that. So but anyway, if you have any interest in discussing HELONs, I have great lenders that I use. Half my lenders will do a second mortgage or a HELOC these days, so there's a lot to choose from, but there's a select handful of lenders that are very competitive, are very quick with turnaround. And another thing I want to add is I have lenders that can actually do first lien HELOCs. So it's kind of a rare product, but if you have a home that's free and clear and you would rather do a home equity line of credit, so let's just say you want to, for whatever reason, avoid an appraisal, you want a really quick process, lots of times we can do HELOCs without an appraisal. So it's kind of cool. So you'll run into a lot of lenders that say we can't do a HELOC because you don't have a first mortgage. Well, I've got lenders that are willing to do that and without an appraisal. So it makes the process really, really easy. With these types of products, the HELOC and HELON, in some cases, we can go all the way up to 90% combined loan to value. With a normal cash out refi, they only allow you to go up to 80%. So with a HELOC, HELON, you can actually access more equity than just doing a traditional first lien cash out refinance. So that's another reason why these loans are so beneficial, is because you have access to more of your equity than you would with a traditional loan. Yeah, if you have any questions at all, you can book a call with my calendar linked below, fill out my application, give me a call. I mean, I give you endless ways to reach out to me, and I hope to hear from you soon. Once again, this is Sal Bossio with Mortgage Universe, and if you enjoyed this video or found it beneficial for you, please go ahead and hit the like button. If you like the content, go ahead and subscribe. And if you know anyone else looking to pull out some equity to do anything, home improvement, pay off debt, to free up, their cash flow, or maybe invest in real estate, and they're looking for ways to do that, don't hesitate to share this video as well. Again, my name is Sal Bossio, Mortgage Universe. Have a wonderful day.